As important as the policy announcement, Harsh. Thanks very much for joining us with that. Let's get perspective from our consulting editor. Mythili Bhusnurmath is with us. Mythili, the question is, will the RBI follow its path of strong interest rate hikes tomorrow as well? Go ahead with 50 basis points perhaps and then unwind a little. Do you see them holding back a little just to allow some breathing room for growth in the economy anytime soon?
Well, not really. I think the expectations are, as Harsh said, that the RBI will hike interest rates by 50 basis points.
Yes.
And perhaps, this is only perhaps as far as liquidity is concerned, change the stance from withdrawal of accommodation to neutral, because that takes care a little bit of the growth concerns. Though frankly, stance doesn't mean very much, but markets read much more into it than perhaps warranted. So to that extent, it would seem as if the RBI is taking into account worries about growth, because even though high frequency indicators do suggest that growth is on track, the fact is that we are living in a globalized world, and a great bulk of the world, the Western world at least, is heading into recession. There's no way India can really escape the ripple effect of a slowdown in the world economy, particularly because exports were a great support in the last fiscal. And if that is not going to happen, then you do need to have some consideration for growth. At the same time, we don't have too many choices, because even though commodity prices have come down recently, there's no guarantee that this will continue for longer. So as of now, expectations are that 50 basis point hike and perhaps a shift to neutral stance.
And like you're saying, as far as decoupling is concerned, you really can't. When the world is in recession, how decoupled can India be? And you're talking about trade and the current account deficit. In fact, we've got that data come in today, Mythili. India's current account deficit for Q1 of FY23 has gone up. It's widened to 2.8% of the GDP, and it's come in at $23.8 billion, mainly on account of a higher trade deficit. The $23.8 billion figure is up from the $13.4 billion figure, which is 1.5% of GDP, which was reported for the period between January and March of the last fiscal. Now, the government has also put out data of its borrowing plan for the second half of this fiscal. And that's where it says it's going to borrow 5.92 lakh crore rupees in the second half of the year. And it's also planning to raise 16,000 crore rupees through its sovereign green bonds. Meanwhile, the government has raised the interest rate for small saving schemes by up to 30 basis points. Mythili, these twin deficits of current account deficit and fiscal deficit, they've been a long-standing problem for India. How much more severe has it become now? And what does the government's borrowing plan tell you about its ability to serve the deficits?
Well, I think this evening we got a whole host of data, both on the external sector as well as government borrowing. And we also saw the rate on small savings go up. I think all this, frankly, is a little bit of preparing the ground for what will come tomorrow, the hike in the interest rates, because there have been growing concerns about the health of the external sector. So what we saw from the balance of payments and current account data for the first quarter is that though the external sector health has worsened, it is not alarming as yet. But mind you, this is for Q1, the first quarter which ended in June. Going forward, we have seen much sharper depreciation in the rupee, and we are seeing exports slow down because of decline in global demand. So there is no guarantee that even though the current account deficit as at the end of June was only 2.8% of GDP, below that 3% danger mark, expectation is that this year we will end with the current account deficit well over 3%. 3.8% of GDP is what some estimates suggest. Along with that, fiscal health has never been very good. So the combination of the current account deficit and a fiscal account deficit is something that we have not seen for a while. COVID, of course, you have to exclude the COVID years, because the COVID years, in any case, current account was not really a problem. Fiscal deficit, all countries had a high fiscal deficit. But now we're again seeing the emergence of this, primarily because of what we're seeing on the commodity front. High oil prices are disastrous for India. At the same time, even though the rupee depreciation should normally help exports, when global demand is falling, you will not get that benefit. So overall, I think we are headed for trouble sometimes. Growth might not contract the way it has in the rest of the world, but that's not saying very much, given that we have a significant number of our people below poverty line, given that we don't have much elbow room. So all in all, I think we are headed for some tough times. Hopefully the impasse in Ukraine will end soon, and that would perhaps be the biggest plus for India if that happens.
Meanwhile, we're seeing the bond markets go into complete mayhem mode, and that's where the government now is also talking about their much touted green bonds and hoping to raise 16,000 crore rupees through it. What do you make of that plan?
Well, don't get too excited about green bonds, frankly, because it is ultimately government borrowing. So regardless of the color, quote unquote, it is government borrowing. So one doesn't know whether the appetite for it will be any significantly different from the rest of the government borrowing. But the fact is that at least so far, the government says it's going to borrow a little less than what it had estimated for the year as a whole. The estimate in the budget was 14.31 lakh crore, and now they say they'll borrow 14.21 lakh crore. And the good thing is a substantial part has already been borrowed in the first half. The second half, when normally we'll see the economy do better because festival season, the so-called busy season, as well as pick up in economic growth, the government's borrowing is little over 40%. So overall, government borrowing should go through. Of course, we will see a pressure on yields as liquidity tightens, and we've already seen US 10-year yields at 4%. So that, I think, is a worrisome sign. Overall, I think we really have to be watchful and go ahead, fingers crossed.
What about the Indian currency, Mythili? Because that's where considerable pressure has been mounting, and the finance minister as well as the RBI would have us believe that we've cushioned the fall so far. But looking at the impact that it has on inflation, especially when it comes to imported inflation, should we expect more of this kind of pressure build up on the Indian currency too, as cushioned a fall as it might be, even going ahead?
Well, I think that is inevitable, Vikram, simply because as the US dollar strengthens, you are going to see a flight out of all emerging markets, including India, and that is going to put pressure on the rupee. We've already seen the RBI tried in vain to defend that 80 rupee to the dollar mark. They gave up. Now we've, almost at 82. It might weaken even further. It all depends because this is really a response to the strengthening of the US dollar. And as the US dollar strengthens in response to the Fed tightening and hike of interest rates in the US, I think this is inevitable. We've already, our reserves are substantial, I agree, about 540 billion, but this is about 100 billion less than what it was a year ago. So clearly, we really have to move very, very carefully and slowly and hope that the pressure on the rupee does not become too much, simply because more than the level of the exchange rate, the fact is it has huge implications for imported inflation, as you said. And with inflation already trending high, and the MPC having to write that letter pretty soon to government explaining why it failed and what it hopes to do, it doesn't have too many choices. It's really got its back against the wall. So let's see what the MPC does tomorrow. As I said, 50 basis point hike and perhaps a shift to neutral, taking care of growth concerns is the general expectation.
Mythili, always a pleasure chatting with you. Thanks so much for joining us with your perspective on India tonight.